because these people ran a gambling parlor. They didn't buy any securities. They just enabled people to make bets against the house, and the house furnished little statements of how the bets went out. It was like the off-track betting. They put in the options exchanges. There was like one letter saying you shouldn't do this. And Warren Buffett wrote it. And he just said, this is not doing any good for the wider civilization. We don't need this.
Now,
and he was all alone. And he was totally right. When we separated banking from investment banking, on the theory that investment banking had a natural proclivity to get a fair amount of knavery and folly into it, and that we wanted to protect our banks from the contagion, that was a good idea. When we created margin rules that discouraged heavy borrowing against securities just to make more money when the securities went up in value, that was a good idea. When they wanted to make the market system a better gambling casino as a side function of a necessary capital market with vast profits for the people who were helpers in the trade, the market makers and the brokers and so on. That created a big constituency in favor of a dumb change. And there was little Warren Buffett saying this is a dumb idea. We're not controlling margins if you're having option exchanges.
You get unlimited leverage whenever the market
leverage
will support.
comes automatically with an option exchange.
Of course.
And then they did the derivative trading, which made the options exchange look like a benign event. And so just one after another, we made these insane departures from the corrective devices we put in the last time we had a big trouble, and that really worked quite well. The investment banks of yore, when the Mellons were running First Boston, and Morgan Stanley was a very conservative place, chastened by the 30s. The investment banks were partnerships. They were totally private. The partners were dependent for their retirement on the prosperity of the firms they left behind and the customs and culture they left behind. And the places were much more responsible and honorable. The old First Boston Company had as one of its early employees, or one of its employees, a good friend of mine. And when he went there in the early 50s, they cared terribly about the consequences to their clients long term from the securities they sold. That ethos, by the time the year 2006 came along, had pretty well disappeared.
Now, you and your partner, Warren Buffett, have for years complained and warned about the dangers that you perceive in the modern derivatives markets, particularly credit derivatives. Also concerns about interest rate swaps, currency swaps, equity swaps. But your real concern has been about the credit derivative market.
Well, the interest rate swap had enormous dangers in it, given the size it was on at, and the accounting that was allowed. But the credit default thing just went to new levels of excess from something that was already gross and wrong. And what happened there was rather interesting. In the 20s, we had the bucket shop.
Right.
And the bucket shop was a term of derision because these people ran a gambling parlor. They didn't buy any securities. They just enabled people to make bets against the house, and the house furnished little statements of how the bets went out. It was like the off-track betting system.
Until the house lost its money and all of a sudden disappeared.
Yes.
Or the house made its money and all of a sudden disappeared. Either
That
way.
is right. But the bucket shop was regarded, in retrospect, at the end of the 20s, as a criminal enterprise, counterproductive to the nation. Derivatives trading with no central clearing brought back the bucket shop. But tell me, because you could make bets without having any interest in the basic security, and people did in the billions and billions and billions of dollars. So we had a system in the professions and in the regulatory agent and some of the most eminent and most admired people in finance, including Greenspan, argued that derivatives trading in the form of the old bucket shop was a great contribution to modern economic civilization.
Now, the Federal Reserve is
There's
working...
one word for this. It's insane.